Yo, what's up, guys? We're going to be looking at Realty Income stock today. They literally just reported earnings, and the stock is down 1.7% after hours on some earnings that I thought were pretty good. So, in this video, I'm going to show you the earnings for yourself so you can go and draw your own conclusion. One popular metric you want to look at for REITs is actually the AFFO. You don't really look at net income for REITs because it doesn't include the depreciation and the amortization, which is super important for real estate investment trusts. What you actually want to look at is the core FFO or the AFFO, and that's this number down here. And I like to look at the AFFO per share because it includes stock-based comp and all that. So anyway, the number we actually want to look at right here, here's their full year 2025 AFFO guidance of $4.22 on the low end. So they expect $4.22. So if we do their current stock price of $57, we divide that by $4.22. Realty Income is trading at 13.5 times AFFO, which seems pretty fair, to be honest with you, but that's not even the best part about Realty Income's earnings. Let me show you this for yourself. So check this out right here. Obviously, we like to look at the AFFO. It actually increased 4.8%, which I guess just barely beats out inflation, but here's honestly the best part in my opinion. I'll go ahead and show you this first. Look at their exposure to the dollar stores and these pharmaceutical stores like this. Look, exposure from December 2023 went from 5.5% to 4.7. And look at the dollar stores. As you know, the dollar stores are kind of risky. Dollar General and Dollar Tree, both of their stock prices aren't doing so good. And look at their exposure. Historically, it's over 7%, Now it's only 6.4%. So they're divesting some of those assets, or they're just not buying any more of those assets. So now if they're buying new properties, it'll be in these other sectors right here. So we can actually see who their top 20 clients are. It's actually 7-Eleven, Dollar General. We can see the percent of their total portfolio. So 7-Eleven is 3.5%. And I like that it's only 3%. It's not a huge, extremely meaningful amount. So then Dollar General, Walgreens, these are the kind of stores they've been divesting from. Their exposure to these used to be higher up, but now as we can see right here, it's actually gone down since 2023. So that's part of the good news here. You can kind of see some of the other names like LA Fitness, CVS, but this is what I really like about Realty Income and probably why you like it as well. They actually focus on paying monthly dividends rather than quarterly dividends, which is pretty cool. So you get a 5.5% dividend yield, a monthly dividend right now of 0.268. So basically a little over a quarter. You get 129 dividend increases since 1994, consecutive dividend increases. So a lot of good news here. And look at this right here. They call it the magic of raising dividends over time. They kind of just show you the value of 1,000 shares purchased in 2014, a 20% increase in the value of the original investment, and 62% of the original investment was paid back as dividends. So, or as dividend income. So that's what they're trying to sell you on here, is the really high dividend. You can kind of see Realty Income. I should probably zoom in a little bit here. Realty Income versus, all the other here's the S&P 500. I'm not sure if this is true. Maybe the data is kind of changed because the Realty Income has not outperformed the S&P 500 the past, 5 years here, but it's saying Realty Income has done better than all the other indexes if you go back to their kind of IPO price. Well, I mean, that is kind of true, I guess, if you include the dividends reinvested, it kind of just compounds every year. But yeah, I want to do a little bit more math for you guys as well. So check this out right here. As we know, they pay 0.268. So I'll kind of do the math for you. 0.268 times 3. This is their quarterly. This is why I hate Microsoft Bing. I need to go back to Google. But anyway, I don't know why I'm on this. But anyway, their quarterly dividend cost 80 cents. And check this out. They just reported AFFO of, where was it? For just this quarter right here, $1.05. So they have a very healthy 70-80% payout ratio. That's why you don't look at EPS and net income, because it was only 23 cents. They obviously couldn't afford the dividend. It's because you got to add back the depreciation, the amortization, which is super important for, real estate assets. There's all the tax breaks that you get. And they have achieved a recapture rate of 170% or 107%. So the leases that they have, they renew them. They keep signing more of them. So that's a very good statistic that they have. So yeah, Realty Income is a very cool company. Real estate investment trust, you don't get a qualified dividend, but you do get the 5.5% monthly dividend. It's a good one to hold in your tax-free account, the Roth IRA. basically get the 5.5% yield tax free. But you're not, with Realty Income, you're probably not going to outperform the S&P 500 in the long run. Like I said, the past 5 years, I think Realty Income has actually underperformed. But you get the nice little dividend yield, not just a little yield, a really nice yield. So yeah, so if I was a Realty Income shareholder, I would not be worried at all. If anything, this just reaffirmed that the dividend is very safe. The only thing that was slightly concerning was the AFFO guidance of $4.22. While yes, it easily covers the dividend, it's only up like 3%, or they're forecasting only 3% AFFO growth for the full year. So I don't think investors love that, but the main part of the stock here is the 5.5% dividend or 5.6% yield there. We know that that's safe. Look at the dividend in the middle. The yearly dividend cost right now $3.21. As we know, they just forecasted $4.22 of AFFO. So again, a very healthy, dividend payout ratio from Realty Income. One thing I will note, like this is why you look at the core FFO down here. It's $841 million. And look at their dividend right here. We can actually see the cost of their dividend. It costs $689 million every single quarter, and it actually goes up every single quarter because they're actually diluting the shareholder. So look at this. The shares outstanding are actually up 21%. But you know what's fascinating? The AFFO per share, even though you've been diluted by 21%, it's forecasted to be up 3%. This is why I look at their property, plant, and equipment. This is crazy. It's up 20% year over year to 57 billion of assets. So Realty Income is chilling on a bunch of assets. And here's the thing: they don't have to issue debt. Well, they do have some debt, 26 billion, but they're buying these assets by issuing shares. So that does dilute you, but still the AFFO per share is going up, and the per share includes all that dilution that they do through acquisitions. But anyway, I don't think they would dilute the shareholder for an investment that wouldn't give a good return on the money. So anyway, Realty Income is a really cool one. Let me know what you think about this stock in the comments. I'm really curious to see what you think about them. And also, please drop a like for me if you like my little analysis. I just try to show you the numbers for yourself. You can draw your own conclusion. I like how they're divesting away from the dollar stores and like the Walgreens and the CVSs. So that's good news. Yeah, look at our Robinhood portfolio. Just the past week. We are down 6.2%. So not great. How's our Roth IRA doing? Our Roth IRA is down 1% on the day. This one's actually pretty close to all-time highs. So yeah, let me know what you think. Hope you have a great rest of your day. My name's Nathan Robert, and I'll see you guys in the next video. Y'all are the best.